Hey traders, Raghee here, and in this video we're going to discuss the crude oil market. A lot of questions about crude. I want to talk a little bit about market structure and what today's candle means for the potential of breakout trades and why I do not recommend buying up at this high. So let's talk about the market structure on crude. It's a double green. Double green denotes what I look for, correct structure in terms of the relationship of four key moving averages, the 8, 13, the 21, and the 34. And that's when we get this particular trade flag right there saying that the path of least resistance is most certainly up. Now, how long have we had this reading? How long has the path of least resistance been up? We'll take a look at the bottom of the chart right here, right in there. That is your double green. And that double green started, as you can see, basically right on the 30th of November, and that means that that particular set of moving averages tells us on that date, having gone double green, we can look to the long side on pullbacks. Now, when the market's double green, one thing that I've taught traders, it's ideal for pullback buys. We've had a couple of those along the way, but it's also the only environment that if you're a breakout trader through, say, resistance, and you're looking for potential buys and moves to the upside, double green is the only environment for that as well. So the question is, when's the last time we got that signal that it's all right to buy breakouts and the path of least resistance is up in terms of validating momentum entries? It was actually right in here. It was right in there. And the market, shortly after this time, began to get a whole lot more parabolic. So really right here. Okay, that's really a momentum breakout scenario. So I'm waiting for another one of those. We haven't quite done it yet, and I suspect once we get above 50, I'll have that reading once again to say that yes, breakout buys are going to be something we can look for again, or the market's likely to go parabolic. What if you don't want to take a breakout buy? Well, if the market goes parabolic, because at that point we'll have a certain distance between the wave and current price. If the market goes parabolic, that also means for my pullback buyers, we'll be looking at shallower pullbacks. So regardless of how you like to enter the market, knowing when we start to get to an accelerated parabolic market is really important. And it's only when we have a double green environment like we do right now that is a high probability setup. So that's what we're looking at in crude oil. OPEC's opened the way, I believe, to movement up through 50. We'll just wait for the setup. In the meanwhile, I'll see you in the next update.